Hey traders, alright, in this video I'll be covering one of my favorite Elliott wave trading patterns, which is the triangle. And whenever I do these videos, I think it's always more fun if I can show you like an actual trade example that I've done. So it just so happens I have a pretty epic trade here that I have taken. It is an Elliott wave triangle in the Forex market, and the currency pair was the dollar Russian ruble pair. Now, I did not milk nearly everything what I in theory could have out of this trade. You can see here my trade duration was only 2 days, and as far as a percentage that I captured about 6.25% move, which in a currency is like, that's massive, that's a big move. But oh man, the net move was absolutely insane. But I had a feeling that they would shut down the contracts with most brokers, and I would have a very hard time getting an exit price. So I got out to make money. I didn't stay in just to have the bragging rights, and then who knows where the broker would fill my exit order. So I just wanted to show this to you so you have confirmation. I did in fact take this trade, and no, I didn't get nearly as much out of it as I could have, but hey, I still identified the pattern and I took the trade. And it's a cool real life example that we can talk about here. Now, the key thing with the triangle, all right, is that it's important to understand where triangles can take shape. In a typical Elliott wave five-wave Elliott wave cycle, there is only one place in this impulsive cycle where a triangle can take shape, and it's not in wave 2, it's not in wave 1, it's not in wave 3, and it's not in wave 5. The only place within this cycle that an Elliott wave triangle can take shape is in wave 4. All right. Now, this is because triangles always precede the final movement in the direction of the larger underlying trend. All right. So in an impulse wave, wave 5 is the final movement of that cycle. So a triangle can only occur in wave 4. This is why a triangle can't take shape in wave 2, because wave 3 is not the final move in that sequence. The other time a triangle could take shape would be, for example, in the wave B position of an ABC zigzag. So if we have a zigzag here, then wave B could be a triangle. Why? Because wave C is the final move in this sequence. Once wave C concludes, we will get a big move in the opposite direction. Now, there are more complex Elliott wave corrective patterns. You know, we can get into combinations, as they're called, double threes, triple threes even, but I don't want to complicate this video too much. So if you have questions about complex corrections and how triangles can fit into those patterns, just let me know, okay? I'm happy to cover that for you. So now that we've covered where a triangle can take shape, it's important to understand what a triangle can look like. So a triangle will be made up of 5 waves, waves A, B, C, D, and E. Now, this is what an Elliott wave triangle will look like. There are variations. All right, so I'm just going to label this A, B, C, D, and E. This is classic textbook form, okay? We can draw trend lines connecting points A and C and B and D. The trend lines don't actually matter in this case. Like, I don't trade triangles on a break of the trend line. I will draw trend lines just to visually identify the pattern on the chart. But triangles are visually quite easy to spot. It's a sideways price action movement. So this is known as a contracting triangle. Contracting because the trend lines are converging and pointing towards one another. And if you drew these trend lines into infinity, they will cross at some point. The point where they cross is called the apex of the triangle, right? As a general rule of thumb, the closer prices trade within the triangle towards the apex, the more violent the release of energy will be when we finally break out. As far as trading triangles go, there's a pretty general rule of thumb that I tend to stick to in like 85% of situations. If you want to know what the other 15% of situations are, leave me a comment below and I'll be happy to let you know. So I like to enter on a break of wave D of the triangle. That allows me to place a stop loss just below the wave E extreme. So I get a very good risk reward profile in most situations as I'm looking for that thrust higher. One thing to remember with triangles, like I said, is because they precede the final actionary sequence of an Elliott wave cycle, of a move, the move after a triangle is going to be violent, and it's going to be ugly, and it's going to come in the opposite direction. And we're going to see exactly what that looks like in the Ruble in just a moment. So the thrust, the movement out of a triangle is known as a terminal thrust. Not just a thrust out of the triangle, a terminal thrust, because what will happen next is a violent move in the opposite direction. So what we have here, like I said, is a contracting triangle. There are other variations. We can also have what's called a barrier triangle. Now note, these are all bullish triangle examples. If you're interested in bearish examples, you would simply flip these upside down. And again, we have our waves A, B, C, D, and E. This is known as a barrier triangle because the trend line connecting B and D is pretty much flat. All right, it's not converging like it was before. This is like almost like a horizontal resistance line that prices have to punch through. Classic technical chart pattern guys could call this an ascending triangle. It's an ascending triangle because prices are getting squeezed slowly higher by this other trend line here. So the bottom trend line is sloping upwards and the top trend line is flat. All right, that's the characteristic hallmark of a barrier triangle. The next example we have is known as a running triangle. And this is what trips people up the most, which is why I'm saving it for last. There is actually one other triangle variation, but it is so rare that I'm not going to mention it in this video. It is called an expanding triangle if you're curious, but I'm not going to cover it in this video. Expanding triangles merit a video of their own just because of how exceptional they are. If you're labeling a triangle, do not ever assume that you're dealing with an expanding triangle first. Look for other wave interpretations before, as almost as a last resort, I would consider an expanding pattern of any variety. So the running triangle, we have wave A down, but this time wave B goes above the start of the last wave. So if this is a wave 3, if this is a wave 3 leading up into the triangle, you'll notice that wave B actually makes a new high. And this is why it trips people up, because most people, when they see this, they're going to go long. They'll say, we took out resistance. It opens the door for more upside. The problem is that the triangle's not quite done. So we're going to have another wave lower, sharply lower in wave C, and then we're going to get a bounce in wave D, and then we're going to get another corrective decline in wave E, and then we're going to get that big move. All right, so a lot of people will get shaken out by running triangles because the running triangle wave B makes a new high. So it's a classic bull trap. Running triangles are actually very common. They occur almost, I'd say, 40% of the time. So you have to get used to seeing running triangles. Otherwise, you're going to get tripped up by this wave B making a new high. The entry parameters and stop loss parameters are the same, however. I'm still looking on a break of wave D, and I'm still looking at placing my stop loss below the extreme of wave E. For targets, I like to use Fibonacci relationships. Fibonacci relationships are what I use for pretty much all of my targets, and that will be covered in a separate video. So I can show you how to place targets regardless of the pattern. The pattern doesn't matter so much to me for setting targets. What matters is the nature of the waves that have unfolded before. Okay, so I'll show you what I mean by that in a future video. That is super exciting. It is highly reliable. It's the closest thing to a real life magic trick that I know. So I'm excited to show you guys that at some point. Moving back onto the dollar ruble triangle. So we can see here we have a barrier triangle, right? We have waves A, B, C, and D. Notice how the AC trend line is sloping gently upwards. It's not a very sharp slope like this. It's a gentle slope, but the BD trend line is almost flat. Okay, if you want to split hairs and call this a contracting triangle, it really doesn't matter to me. The bottom line is that this is a triangle, and we can go long on a break of wave D. And if we take a look at my screenshot, so wave D, by the way, was 80.41. Okay, so I think I jumped the gun here a little bit. My entry price was 79.85. The reason I got in a little bit early was because I had a feeling, due to the geopolitical sensitivity that was going to affect this currency pair, that once we took out that wave D point, we were just going to rocket higher, and I might not get filled correctly, or I might not get a good fill on my buy stop order. So that's why you'll see I took a market order quite a few points below the wave D breakout, but I was really confident in labeling this triangle. Now that is the exception. All right, it's not the rule. I will usually not take an entry like that. So like I said, my general rule of thumb is to wait for break of wave D. Okay, and then my exit, like I said, I was only in this trade for 2 days. I did not want to overstay my welcome, because I know a few people that did buy dollar ruble, but they couldn't get out because the broker froze trading. And by the time they unfroze the currency pair, it was tough to get a good exit. But for those of you that are interested, I mean, that is absolutely epic. And remember what I said. When we collapse, when the terminal thrust of a triangle is over, we will see a collapse in prices. And that's exactly what we saw there. I mean, let's just measure that as a percentage decline. Yeah, that's a 41% decline in dollar ruble. Okay, granted, the upside was historic, and the downside is equally historic. I've never seen this violent a move in such a short period of time. For a currency, this is unprecedented, I believe. Maybe I'd have to look into what's happened with the Argentinian peso, but I still think this is even more extreme. If someone out there has some firsthand experience with the peso, let me know. But as far as personal recollection serves, this is the most violent move I've seen. I think I've ever seen personally. It's definitely the most violent move I've had firsthand experience trading. Of course, there have been other huge moves in the FX market that we could have taken advantage of in the past as well. Everything between Brexit. Oh yeah, Brexit was a lot of fun. So you know that the FX market is notorious for having these violent moves. You know, we'll get sideways price action for an extended period of time. I mean, basically from August 2020 to February 2022, prices just went sideways, and then boom, we got that release of energy. So history lesson aside, that about covers it for triangles, trying to keep this short and sweet. If you have any follow-up questions, let me know. You know, as always, there are intricacies, there are twists, there are turns. You know, what about this chart? What about that chart? It's not uncommon to have questions. So I would encourage you to find triangles on your own price charts, share them with me, and then we can discuss whether or not they fit the rules and guidelines that Elliott set out. All right, thanks everyone. That's it from me. See you guys in the next video. Take care.